Imagine if you could see reversals coming before they happened, and ride trends with the confidence of knowing exactly where to enter, where to exit, and when to stay out completely. In this video, I'm going to reveal 3 powerful TradingView indicators that can do exactly that. They spot high probability turning points and trend continuations, and when you combine them, they form one of the most accurate strategies I've ever tested. Stay until the end, because I'll give you the exact settings and step-by-step rules so you can forward test this strategy yourself starting today. Here's the game plan. First, I'll show you how each indicator works. Then I'll show you how to combine them for maximum efficiency. Finally, we'll look at real examples using TradingView's replay mode so you can see the strategy in action. Quick disclaimer, this is for educational purposes only. It's not financial advice. Always forward test with a demo account before risking real money. That said, if you're serious about catching cleaner reversals and trend entries, keep watching. The third indicator on my list is where the magic really happens. The first indicator is called the support and resistance power channel from Chart Prime. Think of it as a smart scanner that does the heavy lifting, automatically drawing the key levels where price has reacted sharply in the past. But unlike traditional lines, this tool gives each zone a power score, which is a way to measure how strongly buyers or sellers controlled each area. If you see a green zone with a high buy power number, like buy power 68, that means buyers previously stepped in aggressively around that price. So, when the price approaches that area again, there's a high chance it could bounce back up. On the flip side, a purple zone labeled sell power 62 signals that sellers dominated there earlier. So if the price revisits that zone, it's likely to face resistance or a pullback. But there's more to this tool than just colored zones and numbers. It actually maps out a range, not just a single line, by marking the highest and lowest prices within a specified period, plus a midline, which often serves as a natural target or pivot during moves. And to cut down on false breakouts, it uses a 2-bar delay before confirming that price has truly broken in or out of a zone. Now, how do we use this in real trading? Let's say price is trending upwards, but it starts approaching a purple sell power zone with a score above 60. This is your early warning. Momentum could stall, and a reversal might be around the corner. If you're already in a buy trade, that's the perfect place to take partial profits or tighten your stop loss. Another example, price is falling and enters a green buy power zone with a score in the high 60s or 70s. If you see price slowing down and forming rejection candles inside that zone, it can be a high probability spot to enter a long trade. Your stop loss would go just below the zone, and your target could be set to the next resistance level above. One more situation. In range-bound markets, these zones often mark the edges of the range. If price bounces between a high sell power zone and a strong buy power zone, you can trade both sides, buying at the lower green zone, selling near the upper purple zone. The power scores help you filter out weak levels and focus only on the ones that matter. The beauty of this indicator is that it doesn't just give you lines, it gives you context and confidence. You know where the big players acted before, and you can prepare for the same behavior to repeat. Later, we'll pair this with other tools to not just know where potential reversals happen, but when and how to trade them effectively. Quick break here. If you've been manually managing every trade, you're missing out on one of the best trading advantages out there. Pionex isn't just another crypto exchange. It comes with built-in professional-grade trading bots that run 24/7, even while you sleep. From grid bots that thrive in sideways markets to spot futures arbitrage bots that help lock in steady returns. It's all there, ready to go. No coding needed. And the best part? All bots are free. If you want your strategy working for you around the clock, check out Pionex. Links in the description. Now, knowing where price might react is great, but it's only half the battle. What really makes a difference is timing. And that's where the RSI Momentum Divergence Zones indicator shines. If you've ever tried to spot divergences manually, you know it can be tedious and easy to miss. This tool does all the hard work for you, automatically marking bullish and bearish divergences right on your chart and in the RSI panel. So, what is a divergence? In simple terms, it's when price and momentum disagree. A bullish divergence happens when price makes a lower low, meaning it's still dropping, but RSI makes a higher low. That's your clue that selling pressure is weakening under the surface, even if the chart still looks bearish. Buyers could be getting ready to step in. A bearish divergence is the opposite. Price makes a higher high, but RSI makes a lower high. This tells you buying pressure is running out of steam, and sellers might be preparing to take control. Here's where it gets powerful. Combine this with the support and resistance power channel from earlier. If you see a bullish divergence forming inside a strong buy power zone, you have both a location and a timing signal for a potential reversal. If you see a bearish divergence inside a strong sell power zone, that's your cue to prepare for a move down. Let's look at a practical example. Imagine Solana is dropping and enters a green buy power zone with a score of 60. At the same time, the RSI Momentum Divergence Zones indicator marks a bullish divergence. That's a strong sign the selling momentum is drying up, even though the price is still near the lows. A trader might enter a long position here, placing a stop loss just below the zone and aiming for the next resistance level above. Another scenario, the market is in an uptrend, pushing into a purple sell power zone. The RSI Divergence Zones indicator prints a bearish divergence. Even if price is still climbing, this is a warning that momentum isn't keeping up. You could close a long position here to protect profits, or even take a short trade if other signals confirm it. And one more. In a sideways market, divergences can help you catch short-term turning points inside a range. If you see bullish divergence at the bottom of the range or bearish divergence at the top, it's a clue the price could swing the other way soon. The power of this tool is that you don't need to draw a single line yourself. It's all marked automatically, so you can focus on making decisions instead of staring at charts trying to spot subtle differences. And our final indicator is the Mutanabe AI Fresh Algo V24, a complete trade execution system built directly into your chart. It's designed to take away the uncertainty around when to enter, where to place your stop, and how to secure profits by giving you a fully structured plan the moment a signal appears. This indicator is like having an assistant that tells you, here's your entry, here's your stop loss, and here's your targets. It gives you clear buy plus and sell plus signals directly on the chart. And it's not just a label. Every signal comes with a predefined stop loss level and multiple take profit targets, so you can manage your trade without second guessing. The real strength of Fresh Algo is that it's reactive to market conditions. It has a built-in multi-time frame dashboard showing the overall market trend, volatility, and whether the market is trending or moving sideways. That means you're not just taking every signal blindly. You can see if the bigger picture supports the trade. Here's how you'd use it together with the support and resistance power channel. First, watch for price to enter a strong zone. For example, a buy power zone with a score over 60. Instead of instantly buying just because it hit the zone, you wait. If Fresh Algo then prints a buy plus signal inside that zone, that's your go-ahead. You now have both the location from the zone and the execution from Fresh Algo. Let's run through an example. Suppose price drops into a strong buy power zone with a score above 60. You wait patiently. A few candles later, Fresh Algo flashes a buy plus signal right inside that zone, complete with a stop loss just below the zone, and TP1, TP2, TP3 levels marked above. You enter at the signal, place your stop where the indicator suggests, and decide whether to take partial profits at TP1 or aim for a bigger move toward TP3. Another example, price is rallying into a strong sell power zone with a strong reversal score. You don't short immediately. You wait until Fresh Algo confirms with a sell plus signal inside that zone. That confirmation means the market is aligning with your idea, and you have exact levels for risk and targets without guessing. This approach is clean and mechanical. The support and resistance power channel tells you where the smart money might step in, and Fresh Algo tells you when it's actually happening. Together, they cut down on impulsive trades and give you a structured way to act only when conditions are ideal. When it comes to turning any trading idea into a reliable system, backtesting is the bridge between theory and confidence. The good news is that you can test all of these indicators inside TradingView using its built-in replay mode, which lets you move through past price action candle by candle, exactly as it would have unfolded in real time. The first step is to test each indicator individually to understand its strengths and weaknesses. For example, start with the support and resistance power channel alone. Scroll back in time, enable replay mode, and watch how price behaves when it enters high score zones. Note how often price reverses versus how often it breaks through. This gives you a feel for the accuracy of the zones without any other filters clouding your view. Next, move to the RSI Momentum Divergence zones on its own. Again, in replay mode, check how many times bullish or bearish divergences led to meaningful reversals versus false starts. Pay attention to whether these signals work better in certain market conditions. For instance, divergences often perform better when the market is already stretched, and less so in a strong trend. Once you understand each tool separately, you can combine them into the two strategies you want to test. For the RSI divergence plus support and resistance power channel combination, your rule could be enter only when a bullish divergence forms inside a buy power zone or a bearish divergence forms inside a sell power zone. Backtest this by scrolling through past data and recording every instance that fits the criteria. Track how far price moved, whether it hit logical targets, and how often the trade failed. For the second combination, Mutanabe AI Fresh Algo Plus, Support and Resistance Power Channel, your rule might be, take a trade only when a buy plus or sell plus signal appears inside a high score zone. Again, move through historical charts slowly, logging the results of each qualifying setup. You'll quickly see patterns like which power scores tend to produce the strongest moves when paired with the Fresh Algo confirmation. While backtesting, it's important to record not just wins and losses, but also factors like average win size, average loss size, and maximum drawdown. This helps you see whether the strategy produces consistent results or whether it's highly dependent on a few big trades. Also, don't skip testing across multiple time frames. What works well on the 1-hour chart might behave very differently on the 15-minute or 4-hour chart. The goal here isn't to get perfect results right away, but to learn how the indicators behave in different market conditions. By testing them individually first, you'll know their natural tendencies. By testing them in combinations, you'll see whether they truly complement each other or whether the extra filter cuts out too many trades. That's the kind of insight that turns a good idea into a system you can trade with confidence. If you enjoyed this breakdown and want more strategies like this, make sure to like this video and subscribe to Magic Indicator Strategies. That way, you'll never miss the next setup that could change the way you trade.